What's happening, my fellow stock market freaks? It's your boy Kevin. Welcome back to the channel. Growth stocks, penny stocks, they have been absolutely decimated. They've been crushed as the suits have sold and shorted these stocks till they have fallen off of the cliff. But what this has done is given us the opportunity to get really good entry prices on a lot of good growth stocks and penny stocks. In today's video, we're going to be talking about a penny stock, a 10, 15, even 20x potential penny stock that Cathie Wood owns. ARK Invest owns this stock, so it's not some really sketchy penny stock. This is a mainstream penny stock that ARK Invest owns that you can literally get paid to buy. They literally are cheaper than the amount of cash that the company has on the book. So we're going to be doing a deep dive into this penny stock with massive upside potential. It's currently trading at $3.30 per share, and just a couple months ago it was trading 5x that price. It has been absolutely beat down. It's been sold short. It's got pretty high short interest, so there's potential for a squeeze, and it's just undervalued in my opinion. And it has a ton of cash on the books. Let's break it down. Let's get it. The stock in question is ticker NNDM, Nano Dimensions. It's a 3D printing company, all right? And I have the weekly chart pulled up on the screen. We can see that this sucker was trading up over $17 per share a few months ago. Cathie Wood and ARK Invest were buying in these areas here. So they are down big on their position. They continue to acquire more and more NNDM. They are holding, and this thing fell off of the cliff. Now we are getting the opportunity to look at this growth penny stock at $3.30 per share. And in my opinion, it is a steal. And that's just not my opinion. They literally have more cash on the books than what the stock's valuation is. That is the definition of value. And you may be thinking to yourself, well, they could have a bunch of cash on the books, but if they're burning cash through research and development, then it doesn't really matter. But the truth is, they're not burning that much cash. They have a bunch of cash on the books, and they're not burning that much cash. The CEO took advantage of the meme stock hype. He sold stock, he raised cash, and now the company is sitting pretty. I'm actually about to buy some of this stock right here on the video, so full disclosure, I am a holder of NNDM, or I'm about to be. Let's go in, let's buy 1,000 shares of NNDM. Let's do it here on my Webull account. At the price, we'll put a limit of $3.31 so we get filled. You can get some free stocks using Webull, link in the description. It's the broker that I'm currently using. Let's buy this sucker. All right, so we just got filled 1,000 shares at an average price of $3.30. Not the biggest position, but I do think that is a decent entry price, and let's talk about why. Reason number one is just technical analysis. It has nothing to do with the company or the potential upside of the company, just has everything to do with the chart. If we look at the chart, got a ton of consolidation down here in these areas where we're trading at. I think we find a base down here somewhere and round back out. Reason number two, I think this is a good deal, is the amount of cash that the company has on the books. We're talking about a company that has a market cap of just $900 million. But look at the amount of cash. They have $5.34 per share on the books. We're trading at $3.30. So you are getting paid $2 per share just to buy this stock. So I just got paid pretty much $2,000 just to buy the stock. That works only if the company isn't just burning capital left and right. They're just not throwing money into research development. They're not burning cash, but they're not burning cash. They only spent like $30-40 million last year. The CEO did something smart. When the meme stock craze was going on, he did a couple stock offerings, which did hurt the stock's price. But what that allowed them to do is put tons of cash in the bank. So they have ammo in the bank to do research, to do development, and get their products out there, get marketing out there, and get their products sold. They had sales last year of $4.9 million. Not a ton of sales, but those numbers, those revenue numbers are growing, and we'll do a deeper dive into that in just a second. Nano Dimensions right now is burning $3 to $5 million per quarter. That is absolutely nothing. They have over $1 billion on the balance sheet, and they're only burning $3 to $5 million per quarter. So if you multiply that times 4 quarters in a year, they're burning about $20 million on the upside, and they have $1 billion on the balance sheet. So that puts us in an interesting situation, to say the least. A company only burning $20 million right now per year with $1 billion on the balance sheet, trading for just about $3.30 per share. It is a very interesting situation. ARK Invest, Cathie Wood's fund, has been steadily buying in NNDM, and we can look at this chart that shows the shares price down here. This yellow line is the share price. This blue line is acquisition. So the red dots are sells and the green dots are buys. So they've been buying back in 2021 of March 2021. They bought on the way up. And then in September, they had buys. October, they had buys. And some as late as December of 21, they were buying. As the price continued to drop, Cathie Wood and ARK Invest continue to acquire NNDM. Cathie Wood and ARK Invest have an average price of around $9 per share. So we're looking at investing in Nano Dimensions for 1/3 the price of ARK Invest and Cathie Wood. Anytime you can get the opportunity to buy a stock that a smart person like Cathie Wood owns at 75% discount than Cathie Wood's, it's not a bad idea. Now, I'm not saying piggyback off Cathie Wood or just buy the stocks that she's buying, but I do think she's a very intelligent investor, especially when you're talking about growth stocks. And we're getting the opportunity to look at this stock, this penny stock, at a massive discount compared to ARK Invest average price. So I found this article on Seeking Alpha. Now, Seeking Alpha, you can get in a lot of trouble on Seeking Alpha because it's just average retail traders writing articles about the company. But I thought this article was pretty interesting. It was done on January 4th of 22. So the stock presents a deep value play based on substantial mispricing. The market seems to have not caught on to the negative sentiment surrounding ARK. So this guy's basically saying that NNDM has sold off because the market has kind of turned on ARK Invest, and I agree with that. Cathie Wood has gotten some flack over the past couple of months as growth stocks got beaten down. As growth stocks were going to the moon, as the meme stock craze was in full effect, Cathie Wood was the hottest investor on the street. She was the Elon Musk of Wall Street. Everybody was buying ARK Invest. Everybody was chasing Cathie Wood. What was she buying? And as soon as it came out that she was buying it, tons of retail traders would hop on the ARK Invest train. However, the tide has turned, and now investors are kind of soured on the taste of ARK Invest. But here's the deal. She's still sharp. Although her fund has gotten beaten down with the rest of growth stocks, it's a cycle, right? They're not just going to go up forever and ever and never have a correction. We're in the middle of that correction. And when there's fear, that's time to buy. And I'm taking a hard look at this NNDM. The CEO of NNDM recently bought more shares. That is a really good sign. When you have executives of a company acquiring their own company, that tells you that they may know something that the average retail investor doesn't know. So I like to see that. All right, so NNDM, their 3D printer model. All right, so the printer cost a boatload of money to buy, but that's not where the revenue is going to come from. In my opinion, it's like the Peloton model, right? You sell the Peloton bike, but that's not where the majority of the revenue should come from. It should be coming from Peloton's case, selling the classes, the spin classes. In NNDM's case, it's going to come from selling the ink or the 3D printing material. So anytime you buy a printer, right, you run out of ink, you got to go buy more ink. Well, in NNDM, the additive printing, you got to buy the material to do the 3D printing process from NNDM, so you get that reoccurring revenue. And we always love reoccurring revenue, baby. So to buy one of NNDM's machines, their 3D printers, it costs around $450,000. But then, As long as you're using that machine, you have to continuously buy the material to use the machine to print the products that you're making. Like I mentioned earlier, we have seen insider buying on December 14th, 2021. The chairman and CEO bought 500,000 worth of shares from the open market. So we've seen this CEO dilute shares in the past, right? The way that they got all this cash on the books was by selling shares, offering stock, and raising capital. That dilutes the shares, and the more shares that out there, it's probably going to cause the stock to drop. However, seeing that the CEO just spent $500,000 on the open market, this may signal that the stock offerings are over with, and it's a safe time to take a look at getting an entry with NNDM. And look at the revenue growth here. The revenue growth has been consistent, and it's been going up. So here we have basically no revenue in 2018, and we have seen a steady climb in revenue, and I will believe that revenue growth continues. Nano Dimension's revenue fell 50% in 20. Despite the loss, analysts expect strong near future growth of 150%. We saw that in 2021 with year-over-year positive estimates up until 25 at a growth rate of 100% plus. The author of this article did a good job valuing the future growth and where that would put the stock's valuation if they can hit those revenue estimates. So at a 30x multiple, which is conservative based on where the stock is traded in the past, and if they hit the revenue growth numbers, that would give us a market cap of around $2 billion, which would be a 2x from where we're trading at today. I still think that's cheap. I think that's a conservative estimate based on the amount of cash that the company has and based on future growth. As of today, it is the 21st biggest holding in the ARTQ fund. NNDM right here, they own around 8 million shares with a value of about $28 million, making up 1.7% of the ARTQ fund. So I bought 1,000 shares, $330 is my average price, and here is my thesis for this trade. It's gonna be a shorter term investment, maybe a 12-month, 14-month hold time, a little bit longer than a trade, but not necessarily a long-term investment. Looking for this area to hold up right here, this thing to round back out and retest the $5 price point. The $5 price point would give us about a 70% return on this position. A nice little investment here on this penny stock in NNDM. I do think it has upside. Obviously, there's risk when you're investing in growth stocks, when you're investing in penny stocks. So do your own research, do your own due diligence. I love you guys, and I'll catch you in the next video. Until next time, deuces.